Hello and good morning, listeners. Welcome back to Almus Market Mornings, your daily dose of global financial updates. I'm your host, Swaraj Rajagopal, and we have got you covered on everything from currency shifts to pivotal central bank decisions and important speeches. Plus, you'll gain expert analysis on macroeconomic data that's shaping the market narrative right now. Join us for this episode and navigate the markets with confidence. As the chatter around carry trade slows down, there has been some reversal in markets from the extreme moves we have seen earlier. USD CNH, which went as low as 7.08, is back at 7.18. USD JPY, which went as low as 141, is back at 146. So it seems a lot of these moves are slowly getting reversed. Good morning, JK. What do you think? Will we see more recovery, or do you think we may be in for more turbulent times?
Good morning. Yes, I think the moves of last few days were extremely on the overdone side, and it's not unreasonable to expect a good recovery. Uh, while there was no major data or headline risk yesterday, the increasing realization that recent market mayhem was all about deflating the ready to pop everything bubble triggered by a BOJ rate hike. That was the trigger for big fall, and now the market is slowly realizing that even the fears about recession are overblown. Monday's ISM services data that came stronger was one of the reasons to make the market rethink. And while market discounting still shows 1% rate cut this year by the Fed, some of the pundits are doubting it, and they are more inclined towards 0.5% rate cut by the Fed. Yes, there will be a cut, but not as much as the market is expected. And even the yields have shown that they were overdone on the downside. The 2-year yield has actually cruised through 4% mark, and that's another evidence. Helping it also was no fresh negative news from geopolitics. Now the stocks have made a strong recovery, particularly led by Japan, which is now the leading indicator of global stock markets. It has put up a 15% recovery in the last 2 days. Of course, it had fallen nearly 30% since the peak that was seen last month. And the low of 141.68 seems to have been a significant low for Dalian, and it now trades comfortably closer to 146. I think yen staying in the range between 140 and 150 would please the Japanese authorities, and they could feel that they have soft landed the yen, for the time being at least. In fact, the market recovery is also seen getting some lift after Japanese authorities made the statements that stock market volatility will affect the corporate activity as well as consumption. So that is an important factor in guiding the monetary policy. And we won't hike rates when the markets are unstable. These are very clear statements that there is going to be no follow-through hike by the BOJ, and it could be one-off for some time at least. So these are very comforting statements for the market. So market is back to taking risk. Asian markets are higher. US markets did recover yesterday also nearly 1%, but I think futures are showing much more recovery. Even in the Indian market, which it tended to recover but then ended almost flattish yesterday, is likely to recover today. As we see, the low yielding currencies like yen and yuan now once again getting sold. Recovering in USD yuan from below 7.10 to 7.1718. These are all evidence that people are back to some sort of carry trade, perhaps at a low key, and more of a short covering that is helping the market. On the currency, yes, dollar yen has recovered smartly from 141.68 to 146, helped by Japanese authorities voicing their concerns. And the market is not fully convinced that dollar yen has to crash big time after this. Yes, this was a much needed correction, and that has happened. Dollar index had temporarily gone below 103, which was the range bottom for many months, but that was helped because of euro moving towards 1.10. Since then, euro has also moved down towards 1.09 after soft PPI and also retail sales from the eurozone that has pushed it down. GBP is one pair that has been softer because of the sudden rate cut that the BOJ has announced last week, as well as some civil unrest seen in UK in the last few days, which is not helping the sentiment. But more evidence of recovery in sentiment can be seen through the commodities that have put up some rally, as well as helping the commodity currencies, Aussie and Canadian dollar also recover. As for the rupee, yes, we did start at near 84 yesterday, but there were offers from PSU banks right from the start, and after seeing a low of 83.85, it did move to 83.96 towards the close, but that was also because elevated import hedging as well as FII flows, which was again negative. But as the markets recover, I think 84, closer to 84 spot rate and almost 1 year high in the forward premium should be far too attractive for the exporters to take some more hedges. Of course, we will wait for some more economic news in the coming days, particularly the CPI from US next week, to see whether the inflation is further steeping or has seen a bottom. So that is a big question as far as the rates are concerned. For the moment, we'll stay with the recovery progress. Perhaps I think in the next couple of weeks, the market can slip into a range and somewhat recovering mode because we are into the summer period, and unless there is big news from either geopolitics or from the economic data, we will keep to the ranges. The big event that we'll look forward to would be the August 22-23 Jackson Hole meeting, where some indications of Fed's thinking can emerge, because the next Fed meeting is due only on September 18th. Thank you.
Thank you, JK. And I think if I were to summarize it, I think it seems that the BOJ is singing a lullaby to calm investors down and put them back to sleep, which is why we are seeing a lot of nice recovery being made. Yen again, sort of slowly weakening against the dollar. Japanese stock markets, interestingly, have become the leading indicator which investors across the globe are tracking when it comes to equities and when assessing the recovery in other equity markets. So basically, BOJ has made it clear that there may not be a follow-through rate hike if markets remain unstable like they have been. For rupee, we have slowly moved to 83.96 towards yesterday's close. Elevated import hedging and FII flows have kept rupee weaker. So more on how this recovery pans out tomorrow. So thanks for listening and tune in tomorrow to hear the latest in the financial markets.